All right, it's time to dance and talk to Jill. In today's Money Watch, we're talking about student loans. In just a few weeks, on May 1st, a pandemic-era freeze on federal loan payments is set to expire. More than 36 million people have not had to pay their loans since March 2020. That's about $195 billion in payments. CBS News business analyst Jill Schlesinger joins us right now on what borrowers need to do. How you doing this morning?
I'm doing well.
All right, Dollar Jill, let's talk about it. So for 2 years, the government has given students a little bit of breathing room, but where does it stand now?
Well, remember, this is just federal student loans. So that's $1.6 trillion of the $1.75 trillion loans outstanding. They are federal. So most people do have federal loans.
Right.
There's been a lot of talk about maybe this is going to be extended again. I get a lot of folks who come into my podcast who say, well, I'm just not going to pay. Well, I don't think that's a great idea. I think we should prepare so that we don't have to panic. So really start focusing in on May 2nd. That's the day. There is also a little bit of talk about maybe there could be actually the expulsion of student loans under, say, $10,000. Again, it's talk. There is nothing in stone yet.
That chatter has been going on for quite some time.
It sure has.
But nothing has been confirmed.
Nope, not yet.
36 million people are likely going to have to start making loan payments again. How should they get themselves mentally and financially prepared?
Right, and mentally, of course. Go to studentaid.gov. You want to start updating your information. So for a lot of people, they were paying during this 0% interest window. That's a good idea. It shortens the time frame. But you've got to make sure all of your data is collected the right way. You're signing up for an auto debit. You want to check out your payment options. While it's this very strong labor market, some people maybe are not making as much money. Maybe there's an income-driven repayment plan that's in your future. Compare it, look at it. Don't just do what you had done.
So we know that May 1st is National Decision Day, where students have to make a choice.
Getting emotional, Gil?
Something in my throat. Where they have to decide, make a decision about where they're going to apply to schools.
Yeah.
Do you have advice about what kind of colleges you should? How do you base that decision? Because money really matters when you're filling out those applications and deciding
But
where
kids
to
don't realize
go.
how much it matters.
It matters.
That is
right. Exactly
You're
right. You don't
are right
realize
about
that this
that.
can follow you in the future for decades
Forever,
at times,
yes.
right? So here's what I want you to think about. You get these financial aid award letters. There's a real problem with these letters. There's no uniform way that each college must write down, here's how much is a loan, here's what a scholarship is, here's what a grant is, here's what the interest rate will be. So you really got to do some homework with these letters. I'd like to offer 2 guidelines for parents and kids about borrowing.
Great.
Okay.
If you're the kid and you're the student, you want to target your total borrowing for what you think your first year salary will be, okay?
How can you do that?
Okay, because we have so much information. It's great. So according to most recent data, class of 2020, average first year out of college, $55,000.
Oh, okay.
Okay.
Now, if you're a liberal arts major, maybe that's $30,000. If you're a software engineer, maybe it's $80,000. You're a student, try to borrow, limit your borrowing to what that first year salary will be. Okay, parents increasingly are paying the more of the bill. For a family, here's a way to think about it. What's my household income? That income is what I can borrow in total for all of my children. So let's think about that. 2 people, they're together. You each make $50,000.
Okay.
You got $100,000 of household income. You got 3 kids. You cannot borrow or co-sign for more than $100,000. Why? We don't want to rob you of your financial foundation. The last thing any parent wants to do is say, oh, you know what, I would like to retire. Can you help me, honey? I'm glad you enjoyed your college education.
Look, here's the reality. Most people in America don't have a 4-year college degree. And a lot of people are looking at these numbers and thinking, why am I paying $25,000, $30,000 a year that's going to get me a job paying the same amount?
Or less.
This is really important. It is worth it with an asterisk. The average college graduate makes about $1 million more over the course of a career. That's big money, right? And that's 15% more than the non-college graduate. But again, you cannot borrow too much to get there. And also, very clearly, you must finish school. There's no partial credit for getting 3 out of 4 years down. You've got to finish, or else it will not work.
Jill Schlesinger, you have had the last word today.
Oh, my.